Today, we're diving into what could be the most overlooked wealth building opportunity in 2025, and it's all about Canada's natural gas industry. This industry is going to be completely changed this year. So investors have a small period of time where they might find one of the best opportunities to invest in energy since shale oil. Let me tell you why Wall Street has missed this story, what's huge that's coming in 2025, and how a $40 billion infrastructure investment is coming online this year, and how that is going to completely revolutionize not only this industry, but your portfolio. Let me dive into what exactly the projects are, how these projects are going to change the industry, and then how I personally am going to play this trend in 25. And if this is something you are interested in, please do like the video, subscribe to the channel. It makes a huge difference. Doesn't cost anything. Let's start by talking a little bit about the industry. Now, LNG in Canada is very similar to oil. Oil and gas is the traditional way we refer to the industry, and the gas element really is kind of like the little brother. It has been traditionally treated the same way as oil. It's been largely produced in the same kind of region by the same kind of companies and shipped down to the same area, which is the Gulf Coast of the United States. And of course, just like oil, gas is produced and then sold at a discounted price because we only really have one option. It has to go to the States, and they have a huge amount of leverage in getting a better price for natural gas. The thing is, unlike oil, the Canadian natural gas industry managed to make some huge investments in the last decade, and these investments are coming online right now. And specifically, I'm talking about LNG Canada. Now, LNG Canada is a $40 billion mega project that is coming online this year. It's up in Kitimat on the west coast of Canada, and it's going to serve the product produced in Canada to the markets of the Pacific. Now, that's huge because places like Japan, China, Southeast Asia have huge demand for natural gas, and they are willing to pay a serious premium compared to what the Americans currently pay. I have seen estimates that are talking up to 600% better price at this LNG terminal versus what we've gotten shipping it down south. Now, this could be a game changer, but it's only one terminal, right? The thing is, this single terminal alone is expected to be able to process and ship 20% of the daily output of Western Canada in phase 1. That phase is already 95% complete, probably more by the time you watch this video, which means this year, up to 20% of all of Canada's natural gas can be shipped and sold at a dramatically higher price. Phase 2, if it gets built, is expected to double capacity. That we're talking 40% of the total production capacity of the entire Western Canadian basin in one terminal. And it's not the only project. That's the best thing. We also have Cedar LNG, which is a much smaller terminal that's going to be able to export a much smaller amount, but has created a revolutionary framework for investing in this industry. It's Indigenous owned. If you're familiar with the industry at all, you know that there's been a long-standing animosity between Indigenous groups of the western coast of Canada and oil and gas companies. Having Indigenous group own these projects means they've been able to build them at a time when investment in the energy space has been at an all-time low. It's been incredibly difficult to invest in the space to build these big infrastructure projects, and yet they're going to get this one done. Now imagine what they could do when times turn, when things get better, and when they have the opportunity to get real investment from big international banks. We could be talking dozens of these terminals built all over the country. Remember, these aren't just terminals, they're price multipliers. Every single ounce of gas that is shipped from Kitimat instead of Texas is going to have an impact on the price. I've seen estimates that you could be seeing up to $1, $2 per cubic foot in 2025. Now that would be absolutely massive. And if you could see that, you would see a revolution on the bottom lines of Canada's natural gas producers. Let's talk about tickers for a second here, because that's really important. And there's one company more than all that's really ready for this opportunity, and it's Tourmaline. Now, this company has been preparing themselves for this opportunity. they have a huge amount of potential expansion just ready to go as soon as these terminals get fully built, and they are expecting a huge increase in their margins. Here, I've seen analysts predicting you could see an extra 50% margin expansion if these projects go the way they're expected. And I am not exaggerating when I say that that huge amount of cash going straight to their bottom line could completely revolutionize this company. These guys are already expecting to have massive shareholder returns in the form of buybacks, in the form of dividends. Now imagine they had 50% more free cash flow just sitting there overnight. It would be huge. And they're not the only ones. Think about some of these smaller companies. One that I talk about here on the channel is Peyto, but these guys are really, really low cost producers. They have some fantastic opportunities. And the second you see some of these smaller companies get some contracts to ship natural gas at a higher price, we're talking even just $1 higher, you are going to see these stocks explode. They are trading at cheap multiples today. Now, if they even go back to what they were before, you could be seeing a doubling in price. And if they go to where they should be, you could be seeing tripling, quadrupling in the price of some of these smaller producers. That could be the best return possible in 2025. Now, when we're talking about stuff like this, it's always important that we consider the bullish and the bearish case. And let's start with the bear case, because like all things, none of this is happening in a vacuum. And down in the States, in the traditional export market for Canada, down in Texas, there has been talk about building a dramatic amount of LNG capacity to ship out much more LNG to the world markets. Now, this could theoretically flood the markets and sort of reduce that increased price that we are aiming to capture in the Pacific market. There's also, of course, the risk of regulation. We're talking Canada here. There's always the chance that the next government is anti the industry, that it restricts the ability to finish the phase 2 projects, maybe, that it adds an additional price to the producers. It could have some serious downwards effects. Now, the bull case, however, is that these projects work the way they're expected. We see huge expansion in the price of Canadian natural gas, and we see these companies making, I don't know, let's say 2, 3, 4 times the amount of profit they're making today. Now, obviously, as an investor, I need to be prepared for both cases. And I think the key when talking even about my bear case comes from first mover advantage and the growing political consensus in Canada. If this terminal gets finished on time this year, you're going to see contracts flooding in. And if you can secure some long-term contracts, which can be up to 15 years, you could be seeing high prices paid regardless of what other projects get built. Regulation is always a risk, particularly in Canada, where we seem to regulate this industry. However, there's a strong argument for producers and for exporters that this LNG is replacing coal. And so it is the greener alternative. And while it might not be a renewable energy and an end goal for ESG-minded politicians or investors, it is a better option for a lot of these markets than what they're using right now, which should shield it a little bit from regulation. There's also a growing consensus in Canada that we should boost these industries, that it's important that these Canadian producers succeed. And you could see that stop any politician from making a big move to regulate this industry. The best part is that none of this has even mentioned the dark horse in this race, and that's using this discounted LNG here at home. Now, in the western part of this country, there have been some huge investments aiming to take advantage of the super cheap electricity provided by natural gas. It's cheap, it's reliable, and while Wall Street is still not really paying attention, it looks like Silicon Valley has. We're seeing billion-dollar investments from companies like Microsoft. We're seeing talk of data centers being built all across the Western Prairie, where there's lots of land and lots of really cheap electricity. If you see this continue to grow while we see the build out of LNG capacity and while we see the expansion in the industry, you could have a multiplier effect all over again, where some of that LNG, some of that natural gas is being used here at home, and the rest, of course, needs to be sold at an even higher price. No matter which way this goes, it looks like this industry is set up for a massive move in the next couple of months. And when Wall Street notices, it's going to move, and it will be outside the range for some of us as investors if we wait too long. That's why right now I am buying into stocks like Tourmaline, like Peyto. I'm going to take advantage of the opportunity. I am going to really step it up. I think these stocks are trading at a pretty good discount. And I really think that these projects going online will absolutely revolutionize the industry. Just wait. When you see things like the final decisions made, final investment decisions for phase 2 of these projects, you're going to see stocks move. Keep an eye on the price of natural gas in Canada in the second quarter, third quarter of 2025. I think you're going to see things move, and that'll move stock prices. And then keep an eye on potential further investments, be that from corporate or public areas, where you could see maybe pipelines heading to the East Coast. You could see additional investment into these export terminals. I think all of those things are going to be huge. They're going to move markets. And once Wall Street steps in, once Wall Street sees that hit the bottom line of a Tourmaline, it's over. They are going to step in. So I'm buying right now. I hope you enjoyed this video. If you made it this far, thank you very much for watching. And again, if you could please like the video, subscribe to the channel, it makes a massive difference and it doesn't cost anything. With all that being said, I hope I see you in the next video.